Good morning from Los Angeles. Hot Los Angeles, hot weekend, over 100-degree temperatures. Welcome to Trading with Sergio, Monday edition. I'm also broadcasting this on X, I'm pretty sure. So for everyone on X, welcome as well, besides YouTube, obviously. So for the new folks, let me just go quickly through the schedules. A lot to cover today. I do 3 live streams a week, actually 4. One is on Mondays, Trading with Sergio Monday edition. 2, halfway, middle of the week, Trading with Sergio Wednesday edition. And I do Power Hour, which is let's say, a summary of the week. As far as positions trading, that's a different story. I will explain that in a minute. Summary of the week during Power Hour. The 4th live stream I do is on Wednesdays for members only. That's at 4:30 p.m. Pacific. Trading with Sergio and Power Hour is at 10 a.m. Pacific, 1 p.m. Eastern. Quiet time of the markets. As we all know, we're trading, the first hour, last hour, busy. Just to talk about a couple of topics and do some live Q&A. Positions, obviously. I run this channel with absolute full transparency. Wins, gains, losses, whatever it is. I see a lot of YouTubers and ex folks just posting only their winners. We all have losers. We have to live with that. It's how or what you do with your losers or how you manage risk. If you're able to take losses, a lot of people are not able to take losses. A lot of people, subscribe to the YOLO FOMO party. I'm not known to do that. So if you're looking for adrenaline rush, super excitement, this is not your channel. My type of trading is swing trading mostly. Sometimes I hold positions a month. Sometimes I hold them a day. Sometimes there will be some 0 DTE or day trades done infrequently, obviously. Although that's where the market's at these days. About 60% of SPX volume is on 0 DTEs. People are swinging options wildly. There are days that you will make a fortune with those, and there are days that you will get your face ripped, such as on Friday. But what I do is 3 things. I pay attention to my 3 Ps: patience, position or position size, and planning. You have to have patience to trade. My 30 years of experience, I've traded everything. I've traded from pork bellies to gold in the pits, all that good stuff. But what happens is that at some point you settle down at what you're really good at. A lot of folks I see these days are trying to be good at everything. I don't think that's going to work. It didn't work for me. It doesn't work for me. What works for me is swing trading, taking some overnight risk. Obviously, this year the overnight risk is quite higher than what it was the last 4 years, as we know. President Trump could tweet something or some news can break, and if you're on the wrong side of the market, you're going to get your face ripped. I do understand the value of day trading, but not for me. I think day trading, the numbers prove day trading. Market's green 54% of the time, if you look at it down to the day. And that's after commissions, and the slippage, that's coin flip. I can't trade on coin flip. My main goal is find trends and follow trends. The trend is your friend. My mentors taught me a lot of good things over the past, I don't know, while I was on the desk for 25, 28 years. And they stay with me. So the second P is, besides patience, is position. You have to size correctly. If you're sizing incorrectly, you're going to get blown out. I mean, I do understand YOLO trades, right? I see them a lot on Robinhood or whatever, not Wall Street bets. It is, it's a style. At my age and at my level of comfort financially, I don't need to take that additional risk. And I do understand if you have a smaller account, that's practically what you're stuck with. Have a couple of huge winners and then get on your way, get out of PDT. But different story. But position sizing is key, right? How much you allocate of your account into each position. I rarely go above 15% of the account equity because there are no guarantees. I mean, if anybody says, "Well, I exactly know, I guarantee this is going to happen," it's wrong. It's not going to happen. And number 3 is planning. What is your plan, right? What are you good at? Well, I discovered a long time ago that I'm from trading futures to index options to stock options. I'm good at swing trading. I like taking positions. I like carrying them overnight. I like following a trend. It seems like that suits me well. To each their own. Whatever it suits them, that's what they need to do. I'm not going to force my opinion on anyone, obviously. Some people are very successful day trading. I don't believe you can have long-term success in day trading. And as far as planning, it comes down to education, right? What do you know? If you're trading stock index options or equity options, do you know your Greeks? Do you know how they affect each other? Do you know do you follow obviously VIX and implied volatility numbers, right? Do you know how they relate to each other? The gamma, the delta, and the Vanna, and the charm, and all these things. So once you get that, then what you do is you structure a trade. You know how to structure a trade because that's planning. You have a plan. You execute the plan. Again, there's obviously no guarantees, but that's what you do. You execute it and you move on with it. So the important thing for me is for the newcomers on X and YouTube to understand what I do. If that suits you, please support the channel, put a thumbs up on my live streams. Supposedly helps the algorithm. That's what my YouTube manager says. And share. Now, when I said going back, one last thing to run full transparency, I post my positions every Monday, Wednesday, and Friday on the community page of the YouTube channel. Where is the community page? Towards the middle, you will see a band of, it'll say videos, shorts, live. If you swipe left, the last one, I don't know why they put it in the last one, is the community page. But if you're subscribed and if you turn your notifications on, you will get notifications of when I post on the community page as well. So I strictly every Monday, Wednesday, and Friday post my open positions on the community page for the regular subscribers. Now, this is not trading advice. This is not financial advice. And sometimes I buy something on Monday. By Wednesday, I'm out of it. And if you tag along, you have to do your own due diligence. Follow me at your own risk. The other thing is I have a members group. I like paying it forward and sharing my vast knowledge and experience with these folks. And they get a live stream. They get my trades live. Again, none of it is trading and financial advice. But what I mostly trade is equities, indexes, and options. Infrequently, I will dabble into futures, maybe mostly for hedging purposes, but very, very infrequently. And so, yeah, that's what the channel is about. The channel is about actually paying it forward and putting out some correct information, putting out, educating folks, because I think education is lacking from elementary school levels all the way to college these days. And when I do put out a content, it's about my opinions. Obviously, you may agree, you may disagree, but my opinions are my own, and just like the trades are my own. But I think running a channel with full transparency is the best practice, actually, because getting too high. There's one thing I do well is I don't get too high with winners and I don't get too low with losers. And I am actually specifically working on about a 7% drawdown from an all-time equity high. I have a 6-figure trading account and a large size investment account. I highly recommend for the new folks to do the same thing. Don't mix business with pleasure. You must have those two separated. Obviously, tax reasons is one thing. Accounting, it helps your accountant actually not to kill you at the end of the year. And to me, trading is something that I enjoy. I still enjoy it. I trade my family office account, and This year is reasonably tough, but my returns are pretty good. As I said, though, I'm working on about a 6-7% or 7% drawdown. But the key thing for you guys to understand is the drawdowns are manageable if you keep them at 6-7, maximum 10%. And if you're trading and you look at your account equity and it's like zigging and zagging like Mount Everest, and then it collapses to base one, it's tough because math is not on your side. So if you do work on wild gyrations, right, and then most of us hold high beta stocks, those moves 3x of the indexes. So if, for example, if you have a $10 account and you let it slide to $5, well, that's 50%. Well, if you gain 100%, you'll be back to even. But a lot of people think, oh, well, my account went down 50%. Well, I gained 50%, I'll be back to even. You won't be back to even. So that's why you got to keep your drawdowns to a maximum of maybe 10-12% max, because it's a lot easier to get back to an equity all-time high, and that comes with money management, that comes with risk management. There's no other way of doing it. I mean, I can't have a six-figure account go down 30, 40, 50%, like a lot of folks experienced that during April, right? During the crash. It was a crash. Let's just call it what it is. And how do you battle that? Yeah, most stocks came back, made new highs. What if they didn't? There was no guarantee. When Robinhood sold off from 75 to 30, nobody knows it's going to go to 100, right? That's why the other thing is trading is different than investing. If you're a long-term holder, by all means, you can afford to have these fluctuations if you're dealing with high beta stocks. But if you're trading, there's no reason to have a stock go from 75 to 30 back to 100. And then especially if you're dealing with options, you guys understand, hopefully, time decay, something called theta. It's not on your side, right? So to me, it's keeping drawdowns manageable is the way to success. And one last thing, I say this to my members all the time, and I'm trying to instill this in them. There is a scoreboard. The scoreboard is called your account equity. It gets marked to market every second of the day while the market's open, okay? I trade my account equity. So if my account equity is higher at the end of the month than it was previous month, I'm doing fine. And account equity doesn't lie. That's your scoreboard, right? So if you have, again, a $10 account and it's $11 at the end of the month, you're up 10%. You may have 50, 100 different positions in that account. Does it matter? Should one single position be big enough to blow you out of the water? No. Do they all combine? It's like a supermarket basket. Do they all matter to your account equity? Absolutely. Every second of the day, all these positions are getting marked to market. So what you need to pay attention to is your account equity. Trade your equity. And that's when your drawdowns are getting larger and larger. So if you had a $10 account at the end of the month, you're at $9. Well, you're working on a 10% account equity. Granted, there are unrealized gains, unrealized losses in that account. And there's obviously, when you do take those losses, they become realized or your gains. But account equity does not lie. You have to keep an eye on your account equity. A lot of people pay attention to single positions and do this and do that. If you're sizing correctly, you don't need to do any of that. My focus is on account equity. How much money did I have yesterday in this account? And how much money do I have today? Because all the positions, some are going to help it, some are going to hurt it. But at the end of the day, there is a number. It's either a green number or a red number. Some days it's green, some days are red. Well, the key is to just, watch that. So I trade my account equity. So let's see who's here. Good morning, Luis. Good morning, SJ. Traveler, Nigis, Mojo. Good morning. Manny P. Good morning. George. Good morning. Good afternoon. You must be in the East Coast. So, with that said, I want to talk to you guys about a couple of things. So, I'm actually putting out a video today on the channel talking about interest rate cycles, right? The Federal Reserve on Friday, what happened, Jackson Hole, Wyoming. Jay Powell talked about potentially cutting rates, potentially. I have been talking about this for about a year on the channel. You guys will start hearing this on CNBC quite often now, something called stagflation. I think we're going to be in a vicious stagflationary cycle. This is macro now, it has nothing to do with trading, short-term day trading, options, zero DTs, or whatever. You don't pay attention to, well, you should pay attention to macro for the general trend. As the economy goes, so does the market. But I think Fed's stuck in a box. All asset classes pretty much are at all-time highs, give or take a few percentage points, right? Stock market, gold, real estate, Bitcoin, Ethereum, all these assets, right? If you consider them all asset classes. And cutting rates at that level, there is a notion out there, or there's a belief out there, when they cut the rates, we're just going to moon, we're just going to melt up now. I'm not buying that, because I do study history. I do study what happened before, during interest rate cutting cycles, what happens to markets, and why the Fed is cutting rates, right? And by the way, Fed cannot affect the long end. They can only affect the short end. When I say short end of the curve, maybe up to a year of bills and notes. Anything above that, they really just cannot do anything about it, because the long end, 10, 20, 30 years, is so large, into the trillions or hundreds of trillions around the globe, that in fact, Fed has cut the rates 4 times. Started last September, right? 50 basis points, 25 and 25. What has happened to the 20-year bond? What has happened to the 30-year bond? They've actually gone up 100 basis points. So, the administration yelling about lower interest rates, I don't think it's going to make that much of a difference. But we have to understand what happens during cycles, right? Fed has interest rate raising cycles, and Fed has interest rate lowering cycles. So what happens during that time? You have to look at history. We've had a few of those, right? We've had one during the dot-com bubble, which I don't think we're in at the moment, but we had a perfect one during GFC, right, in 2008. We had another one during COVID. We had one coming out of COVID, right, when we pumped in $8 trillion into the economy, inflation got hot, and Fed went on from ZERP to 5.5% Fed fund rate cycle. And we know what happened in 21, 22 to the markets. So we need to pay attention to these. So why is Fed cutting rates this time? All asset classes are at high. Economy seems like they're doing well. Although unemployment's kind of going higher, right? Specifically in the college graduate markets. All this information is free, by the way. You guys can go to Federal Reserve Economic Data, and check it out. All that information is in there. It's on their website, if you're into macro, that is. I follow quite a bit, actually, what's happening to credit card defaults, because 80% or 75% of our 28 trillion GDP is consumer spending. What is happening to auto loan defaults, prime and subprime? So you have to watch all these things, right? And those areas of the economy are not doing well. I mean, average American, I don't think is doing well, but all asset classes are at all-time highs. So there is there's a disconnect between Main Street and Wall Street. I believe that there is. Am I saying it's going to be a crash or anything? No, I don't think so, because I don't think they can afford to stop the music. If they do stop the music, the musical chairs will end badly, but I don't think they can afford it at this point. So they're going to keep printing. They're going to deficit spend, and we know what's happening to the deficits. My opinion is very clear on the deficits. You guys can go check all the videos I put out about the 37 trillion in 100 days to be 38 trillion deficit. And, again, everybody has different opinions about that, but, we have to pay the piper at some point. Again, nobody knows when and how that's going to take place. It could be a decade from now. It could be long after I'm gone. But the point, again, is macro is something I pay attention to. And so what happens to the markets during interest rate lowering cycles and interest rate increasing cycles by the Fed? Fed will move the interest rates by lowering or raising the Fed fund rate, right? And then that's connected to the discount rate. And then, you guys can go study that on your own. But what I came across this little graph, actually, which I think should be helpful to most people who are trying to figure out because there's a lot of talk that we're going to melt up, right? because there is a saying, don't fight the Fed. Fed's cutting rates. I get that. I fully believe that too, by the way. Don't fight the Fed. But while all asset classes are at all-time highs, why is the Fed feeling the necessity to cut rates? So Federal Reserve is basically, to me, their job is, they're like the gas pedal and the brake pedal of the economy, right? When things get too hot, they raise rates. That's the brake pedal. When things start softening and they see softening ahead, looking at unemployment rates, looking at all these different macro indicators, they lower rates. Okay, well, why is the Fed lowering rates this time? Are they seeing trouble ahead? And that's when brings everything back to stagflation. Parts of the economy, including labor markets, are under strain. There is no question about that. The consumer is definitely stretched, right, with credit card debt. And but on the other hand, Fed is lowering rates while all asset classes are at all-time highs. It's not making too much sense to me. So one or the other one is correct, which is either the economy is slowing down, that's why Fed's cutting rates. And if that's the case, the market's going to feel that pretty soon. If not, a couple of weeks or a month from now, probably sometime this year, we're going to see a decent sell-off. If the market decides, because at the moment, market's not buying any of it. The market's looking at it as, okay, we're just going to keep making all-time highs. Nothing wrong with the economy. The other thing that the Fed is kind of kicked the can down the road on Friday during Jay Powell's speech was, they have a mandate, right? What is the Fed mandate? 2% inflation, which is gaslighting completely. Inflation is not 2%. It's been running 6-7% over the last God knows how long. You can see that by the US dollar actually becoming toilet paper. But the point is, when I say they're in a box, they're cutting rates. Are they thinking the economy is slowing down? If the economy is slowing down, the stock market is extremely, extremely overpriced. If the economy is not slowing down, why are we cutting rates? There's no need. So we're going to find that out, and that's the stagflation part. Stagflation part is unemployment is employment is getting strained. Employment numbers, defaults are getting strained. And Fed is seeing this and cutting it. And while they kick the can down the road saying that, inflation is not a problem, we're going to forget about our mandate for a while. Yes, we can look at all the last CPI, PPI numbers. They're running hotter. So in a stagflationary period, somebody put it in the chat, if you guys know it, there is no cure for stagflation. I mean, if we cut rates now, while everything is at all-time highs, are we going to refuel the fire of inflation? Or if we raise rates now, which obviously they're not going to do, then they're going to kill the economy, right? So to me, they're in a box. And with the pressure maybe from the new administration, Jay Powell on his way out, we know he's going to be out by next June. I'm not sure if the market needs lower interest rates, but if the lower interest rates are coming because there is trouble ahead, the market's extremely overvalued at this level. So I was looking at this chart, and the question is an accommodative Fed bullish for the stock market? Quite the contrary. Well, history, right? We have to pay attention to history. There have been many cycles, Fed interest rate raising cycles and lowering cycles. Well, look where we are. So this chart goes back to 2020. It doesn't have, it goes back to 2000. It doesn't have the true COVID period, but we all know what happened. It's better actually to see what happened in the past. So in 2000, during the dot-com bubble, which I was on the trading desk, Fed actually, the market rolled over and Fed started cutting rates. By the way, Fed cutting rates, and they were as high as 6%. The Fed, this is the blue line on the bottom here is the Fed funds rate. And the Fed started aggressively cutting rates, right, during the dot-com bubble. And but there is a lag effect. So when the Fed cuts the rates, doesn't mean that it's going to reflect itself into the economy immediately. There's definitely a 6-month lag or so. And as we know, the markets price everything 6 months to a year ahead. So during that cycle, rates went from about 6.5% on the Fed funds rate all the way down to about 1.25%. Well, what was the sell-off in the market that we experienced? Again, I'm not saying we're in the dot-com era. Obviously, that was ridiculousness. when I was on the desk. We would be laughing, actually. But so that was a 51% drawdown on the S&P 500 and more on NASDAQ, right? Okay, so then the effect of lower interest rates took hold and markets started rallying, as we know. But then Fed thought, okay, things are getting a little too hot, and it's walking us right into 2008. We know what's going on with housing. I had a mortgage company at that time. We were doing loans for people who didn't deserve those loans, but then if I didn't do it and send it to Countrywide, somebody else was going to do it. So I kind of figured, The Big Short, you guys seen the movie probably. I mean, I lived through that basically. So then Fed started raising rates, right? Look at the Fed funds. This is the interest rate raising cycle while the market's going higher, okay? And then we hit what? 2008 GFC. Fed funds was pushed from 1 to almost 5.5%, and then Fed immediately started cutting rates. And that's when we got the ZIRP, right? ZIRP meaning zero interest rate policy. And what happened? Yeah, the market went down 58% this time. So every cutting cycle, market has gone down. Is it different this time? We're going to find out. We're going to find out how aggressively they're going to cut, and we're going to see what the Fed funds rate does. And obviously, we bottomed. We all know we always bottom. Long term, markets always go up. Short term, there are really painful drawdowns, especially if you're holding 3-4 beta stocks. When an index goes down 50%, your stock's going to go down 80-90%. So the one you're holding anyway. And then obviously the ripper rally from 2008 all the way to now with a couple of little hiccups in between. But as you guys can see, the flat line here, Fed had ZIRP, zero interest rate policy, from 2008 to 2016. And then US Fed, right, started raising rates again because the economy is getting too hot. Well, what happened? So far, not much has happened. Well, we know during the pandemic, right, the interest rates collapsed again. Then we had ZIRP for another extended period of time, and then what? Now we are here, all right? So when inflation got hot in 21, this chart does not include 2021, 2022, but we had a serious drawdown in the markets for those 2 years during the interest rate increasing cycle. So now we're cutting. Well, so my point is, every interest rate cut that people are expecting for them to be very bullish for the market? I don't think so. That's my opinion, obviously. I don't think so. The important thing is to figure out why the Fed is cutting rates. If the Fed is seeing trouble ahead cutting rates, market's extremely overpriced. I mean, we can talk about PE ratios, PEG ratios, all those things, but it's not necessary. But I'm just talking about the interest rate cutting cycle and interest rate hiking cycles. Actually, market does really well during interest rate hiking cycles because that means the economy is getting stronger, demand is there, and it will continue. But when the Fed starts cutting rates, once you figure out why they're cutting rates, then I think you can manage. So please put the questions in the chat. I will answer them. The other thing I will do is I will put the live link up. If anybody wants to show up, grab the StreamYard link. You don't need any specific software for you to show up. We can talk about whatever you want to talk about, but try to come on after I go through my positions in some stocks that I'm following or watching. So here is the StreamYard link. I keep the show open to most folks most times. And here it is. Here's that StreamYard link. Again, you don't need special software. I ask you that you're in a quiet place, though, with decent internet connection. We don't want any, just grab it, and then you just can come on and we can talk about whatever you guys want to talk about. So this week is pretty big. So I have my list of what's happening on the macro end, and here it is. What is happening this week? Let's take a look. I always save it on my phone. All right. So today, new home sales data comes out. Affordability index is at an all-time low. Buying a home is almost impossible these days, especially for first-time buyers. So that was not good. Tomorrow we have August consumer confidence data coming out. Wednesday, the big day after the market close, NVIDIA reports. And next topic, I'm going to talk a little bit about NVIDIA, where things are at. NVIDIA reports earnings Wednesday after the market closes. On Thursday, we have second quarter GDP coming out. And on Friday, we'll have Michigan consumer sentiment data. I mean, I pay attention to that a little bit, but I think the two big items this week is going to be NVIDIA earnings after the close and Michigan consumer sentiment data. So, let's talk a little bit about NVIDIA. Long and strong, obviously. I think NVIDIA, I mean, there's some talk, as we know. Facebook was hiring people with $100 million, these new AI talent. Facebook was hiring AI talent, or trying to steal AI talent from OpenAI. Now it seems like Zuckerberg is cutting. Actually, he's laying off some. I don't know. I mean, like within a 2-month period, it went from a boom cycle to a bust cycle. I don't know what's going on there. But as we know, NVIDIA is the picture of AI, right? They do the best chips, and they have brought that company from literally nothing to what it is today. And my hat's off to the management. It's amazing, incredible. What a story, right? And this is American ingenuity. This is why the world's funds and capital flows to this country. This is exactly why, right? And there are many companies like NVIDIA, but not to that size. So NVIDIA, obviously, as we know, well, today I think we're almost getting to a new all-time high. So I'm going to say 4.5 trillion market capitalization. That's trillion with a T, folks. Okay? Think about it. One single stock. And it's the top, obviously, in the top stock in the S&P 500, because the S&P 500 is a market cap weighted index. And it blows my mind, right? I mean, it's just amazing, absolutely amazing. If you've been in NVIDIA over the last, I mean, it had some nasty corrections, obviously. So for a trader, those corrections are where we trade. But for an investor, if you're an investor in NVIDIA over the last, I don't know, 5, 6, 8 years, you have no complaints, right? And has outperformed pretty much everything out there. And so a 4.5 trillion market cap, though. And with some of the news that's coming out as far as slowing down on CapEx spending by Facebook and OpenAI saying ChatGPT or GPT-5 was a failure, Sam Altman putting out some, feelers out there as far as, are we done with AI for this first cycle? I believe there is many cycles to come with AI. I think this is just the first one. I compare what's happening with AI today to what's happened in 2000, right? With the .com, but when internet was coming out, we all remember. Well, I remember, AOL. Remember AOL, right? With the dial-up modems, and I believe that's where AI is. But one single company. So I'm just going to put it into perspective, because I believe that the market's not going to correct appreciably, because the top 7 stocks, including NVIDIA, Apple, Google, Microsoft, Meta, Mag 7 plus Tesla, those top 10 stocks in the S&P 500, their weighting is close to 38% of the index. If those top 7 stocks, the Mag 7 stocks, are not going to go down, and the indexes are not going to go down, period. Simple. I got an ant on me. And so is this week's NVIDIA earnings going to be a pivoting point or a turning point? I mean, I have no reason to question earnings are not going to be fantastic. But as we know, on Wall Street, we don't care about the past. We care about the future. I think their guidance is going to say a lot. And but there are some cracks that I'm seeing in these nosebleed stocks. NVIDIA is not one. At least they have earnings to support it, or earnings are coming through. But we're talking about Palantirs and things like that. When a company is selling 150 times sales, Palantir actually is under pressure, is underperforming first time this year. But again, look where the stock has come from. So if NVIDIA's guidance is even lukewarm, that may put a cap on the market at some point, regardless of what's going to happen to interest rates. But just to just to make you guys understand the sheer size of NVIDIA as a single entity, single company. So NVIDIA's market cap is now equivalent to 3.6% of global GDP. So take every single country's GDP, add them up, just a single stock at 4.5 trillion market cap is about 3.6% of global GDP. This is larger than the market cap of the entire stock market of the UK, France, and Germany. Single stock, folks, single one. In fact, NVIDIA's market cap is now larger than the GDP, ready for this, of all but 3 countries in the world. A single stock, single company's market capitalization of about 4.5 trillion now, I think it's 4.3 at the moment, is larger than every single country on the planet except 3. And you guys can guess what 3 those are. And, maybe if you want to play that game, put it in the chat. What 3 countries do you think is ahead of NVIDIA's market capitalization? And here it is, right? Market cap in the chart, and on the right hand screenshot, I follow the Coinbase letter. I highly recommend on X. You guys go follow it. So shocking stat of the day. I like it when they put I like the Coinbase letter because they do put they don't extend the topic. They just put a few sentences and it makes you understand it hits home. NVIDIA's market cap now is 1 trillion below. Oh, I gave it away. There's a question on the left side. NVIDIA's market cap now is just about 1 trillion below the Japan's Nikkei 225 index. Okay, this whole stock market. We know it's larger than the UK, France, Germany by itself. The Japanese stock market is the second largest in the world behind the United States, for sure. So, I'm giving away now the answer from the left side. Dang it. And this means NVIDIA is larger than the United Kingdom, China, and Canada's entire stock markets. Single company. Now, some of you may say, this is the tulip of all tulips. Things are going to crash. I'm not that pessimistic. I'm a glass half full kind of a person. Some of you may be glass half empty. If you try to pick a top on NVIDIA over the last God knows how many years, you're just going to get your face ripped. I mean, look, they had some massive corrections. I'm not saying it doesn't. But the timing of that's when it comes trading experience, obviously, reading the tea leaves correctly. But I think this Wednesday's earnings is as big as it could be for market direction and NVIDIA direction coming up. And so obviously we're going to follow that very closely. This comes as NVIDIA's market value has doubled over the last 16 months to 4.3 trillion. What do you folks think? Does NVIDIA deserve to be at 4.3 or not? Today it's up another 4. I think it's 4.5 trillion market cap. Do you guys think so? Do you guys think this AI revolution is in the first couple of innings of the game, or is it in the 5th inning, 6th inning? Look, unquestionable management makes a huge difference. NVIDIA was able to pivot from GPUs, right? They used to make gaming chips, right? Chipsets. Well, they saw what's coming and they pivoted the company, and AMD did to a certain point. And I don't think there's a coincidence that the CEO of AMD and the CEO of NVIDIA are cousins, I think, right? So what a family, huh? Wow. The queen and the king of AI chips. But I don't know. I think, you look, I trade what's in front of me. I can't question success. When I look at a chart like of NVIDIA, and I'm not a pure chartist. I'm sure there are much better people than me, but I do look at charts because look, charts to me tell the past. It doesn't tell me the future, right? My mentors used to say, do you have tomorrow's? Because in those days, we used to read the Wall Street Journal. They would say, do you have tomorrow's prices? I go, what are you talking about? They go like, well, if you don't have tomorrow's prices, then this means nothing. You can look at a chart, but it tells the past. And granted, certain patterns, or I guess they repeat themselves. And you guys will see now my charts. I like naked charts. I don't draw lines because I think that creates so much bias in your trading that you can draw like 50 different lines on a chart. And, look, technical analysis still has value. But I call myself a techno-fundamentalist, right? I need to pay attention to fundamentals. earnings are the mother's milk of a company. The charts can do, because the chart is worth 1,000 words. The picture is worth 1,000 words, because I've never seen a chart that goes from the lower left to the upper right and that company has nothing but bad news. Okay. And I've never seen a chart that goes from the upper left to the lower right and that company has nothing but good news. And as we know, stock prices are 6-8 months sometimes ahead of the news, because out of the blue, a stock will start going up and we're going like, why is this thing going up? There's no news. Well, news will always catch up. So you guys have to understand that part of the market as well. But yeah, so what do you guys think? You guys think NVIDIA is worth? Well, now we know. Is NVIDIA worth more than all the country's GDP on the globe, with the exception of 3? Which ones are those? Well, we know, right? Japan, US, and China. As a single entity, NVIDIA's market cap is larger than the GDP of all countries on the globe, with the exception of those 3. Amazing, unbelievable. What a success story. All right, let's answer questions. Put the questions up. Don't be shy, folks. And then I put the link up if you guys want to grab it and come on. You're more than welcome to. Do you normally see money from money market funds heading to equities after the crash correction? What do you think? Good question. There is about $7.5 trillion in money market funds sitting, collecting about 4%. Although that 4% is barely, if not losing a little bit, but it's better than nothing. So that's actually maybe the saving grace of the market, right? So when the Fed starts lowering the rates, which they said they may do it. They didn't say they're going to, because the market took off. And I don't know. I guess they were expecting him to be more hawkish than what he was. So what's going to happen? The first cut happens in September. What do you think is going to happen to your Robinhood accounts? Money market fund. If you're in Robinhood Gold, right, you pay the $5, but then you collect interest. That's going to go down 0.25% immediately, right? Okay, so from 4, it's going to go to 3.75. Well, maybe people will still hang on, right, and keep the money in money markets. But let's say Fed is on a cutting cycle. They're going to cut all the way, maybe down to 2%, right? Well, that APR you're collecting, if you're in auto swap, right? A lot of brokerages allow you to be on auto swap, or Robinhood does that really, really well, for example. And I have it at Schwab. Although I have a grandfathered account, one of my members figured out that they don't auto swap anymore, but too bad, because they make money that way, right? They pay you like nothing and then sell money on the margin. So that may be the saving grace of the market, right? If the short-term rates or the front of the curve keeps getting lower, well, money market rates are going to go lower, and then the return, people are accustomed to it, 4 or 5%, right? Because the Fed raised the rate from 0 to 5.5 on the short end. They loved it. The savers loved it. Well, now what? If the money goes, your return goes to 2% on your money market fund, that may force some of that $7.5 trillion to come into the marketplace. We'll see. That may be a little bit of a cushion, but again, market's so large, it's into the hundreds of trillions of dollars. I don't think $7.5 trillion is going to save it, and I'm pretty sure most of the people who have money in money markets are going to, right, dump it all in the market, because market corrected 10%. Although retail is supporting the market, right? Retail is just every dip, buy the dips. So with that said, let me get into the market today. If you have questions or you want to come on, grab the link, be my guest. And what is happening today, I'm just going to go. So this is the ritual I do. I go through my positions. I go through my charts. Again, none of this is trading or financial advice. I do what I do. What I do is risky. It's good for me. It may not be good for you. Do your own due diligence. So with that said, hope you guys can see this. This is the triple Qs. As I said, I don't draw too many lines. I draw a few lines here and there, but I don't really draw too many of them. So these are my positions. I have 20 options on AEVA Technologies expiring September, and these will be posted on the community page. I'll go through them real quick. I am long 140 of the, by my account is about 90% cash at the moment. Not because I'm expecting a massive sell-off or anything like that. I'm just happen to be there. So I'm long 140 2x ETF of CoreView, CRWV. This 2x ETF is CWVX. 140 calls of September 15 calls. Stock's about 10. I'm trying to buy them at 40, 50 cents, like a lottery ticket. It's not going to make me or kill me, but I do expect a little bit of a push on CoreWeave. I like trading the 2x ETFs of these. This morning I bought a little lottery ticket gift order. I was able to buy 100 puts on October 5 puts on NEO. Had a massive run. I think it's a little bit pullback. I was lucky enough to pay 22 cents for it. They're about 30 cents. I'm long 2,500 shares of Pioneer Power Solutions. Average cost 370, 369. Stock is 365. And I'm long 2,200 shares of SoundHound. Cost is 1343, but I sold some calls, expired worthless on Friday. I will sell some more calls again this week. I'm not a huge fan of cover calls, but stock is kind of struggling here. I will add to the position. I'll probably add another couple thousand shares to this position. So last month, if for you, some of you who are new, I probably had like 16, 17 positions, and I'm down to 5, and I can cut them at any moment's notice because why? I pay attention to my account equity. As I said, I'm working on about a 7% drawdown from my all-time equity high, which is fine. All I need is a 10% gain to get back to an all account high, right? So I basically, just chart your account equity. I mean, just like the stock right here. This is the triple Qs. I mean, look, as a technician, okay, we had a little bit of a hiccup. Now we're going to retest the highs. SPY is actually, I think, pretty close to highs. One thing that I'm really trying to pay attention to now, my experience says that when interest rate cutting cycles happen, which companies like interest rate cutting, right? Lower interest rates. Are they the Mag 7 companies or are they the Russell 2000 small caps? So small caps. So small caps, this is the SPY. Small caps have been underperforming SPY and triple Q for about 5-6 years now. So this is the IWM, which is the Russell 2000. That hasn't even made a high yet, but although it started out performing maybe like last 2 weeks here, and if we look at a 3-year chart of IWM versus SPY, let's say, this is SPY. Look how different it looks, right, guys, gals, everybody. So SPY has been outperforming IWM, but for a fact that if you do follow history, Russell 2000 does better during interest rate cutting cycles than the S&P 500. Again, I'm not saying for you to do some complex trade and say go short SPY or SPX and buy IWM. What I'm saying is that I think the small caps are going to outperform, so I'm paying attention to IWM quite a lot now, and specifically TNA, which is the 2x ETF, or actually it's 3x ETF. It's a small cap fund, which is IWM's 2x or 3x. I don't know if it's 3x, maybe it's 2.5x ETF. So I do like trading the 2x or 3x ETFs of the underlyings, for example, on Apple and Amazon and Google and Meta, obviously Microsoft. All of them have 2x ETFs. They're very liquid, and I like trading them. I mean, those should be your trading tools, especially if they're optionable. And I don't know. Let's see. Let's go to Palantir. Couple of the nosebleeds. This is Palantir, completely underperforming. Actually red today, which is interesting on a day that Nasdaq is up. High 190s, low 142 a couple of days ago. It's into a little bit of a support, but so the 2x ETF of that is PLTU. I mean, these 2x ETFs are wild. So you can short these too, by the way. By the way, I do short stocks a lot, physically short stocks, not buy puts. So one of my shorts was Joby Aviation. Like, as you can see the labels, I short things quite a bit, and it's very rare that the way my account is at the moment, I don't have any short positions. But on a moment's notice, I will turn over the balance to probably 50-50 at best, if nothing to short. I'll short triple TQQQ, which is the 2x ETF of triple Qs, and or SPY, which is right UPRO, UPRO. But I'm not a huge fan of buying index puts. But then the IV is so low on those now. VIX is so low that I think it may be time to buy some index puts actually, because to sell options with VIX at 1433 does not make sense whatsoever. I mean, VIX is on its butt. And again, I'm not assuming or anticipating a move. All I'm saying is, yeah, market looks a little struggling toppy to me, and it's because of Mr. NVIDIA. Well, yeah, NVIDIA is marching towards a new all-time high, up $3, up almost a couple of percent, and 2x ETF of that is NVDL. So I do like trading the 2x ETF quite a bit of these underlying, right? First of all, I mean, this one is expensive, but on a lot of them, they're like in the teens and 20s. And a lot of stocks have 2x ETFs, so Google them and figure it out. One other one is Tesla. Tesla, for a technician, it broke out, right? It was a wedge. It broke out, following through again today. A little bit of resistance here, technical speak, at 350 range. Last time we pulled back all the way down to, I don't know, about 315. So what's going to happen this time? Obviously, Tesla's 2x ETF is TSLL. Looks good to me. I mean, you know, the more sideways that something goes, the more ripping is going to be on the upside or downside. So most technicians will agree with that. We will trade TSLL in my members group for sure. The other thing is, you know, Robinhood, you know, kind of consolidating now to between, I don't know, 95 and 120, I guess. The 2x ETF of that is Robin, ROBN. Yeah, again, I love these 2x ETFs of the underlying. And a couple other names that I'm following. I like Lemonade quite a bit. Just consolidating now at a high level. It's an insurance stock. They don't sell lemonade. And what else? I mean, if you have any stock questions, just put them up. I'll give you guys my best opinion. Again, I'm not the best technician in the world, but I'm extremely sufficient. And so we looked at the indexes. A lot of the people, obviously, you know, I mean, I know what's going on, but, you know, a lot of my members ask me, like, why is MSTR going down, MicroStrategy or strategy, while Bitcoin is holding here? And yeah, because there's something called MNAV. MNAV is getting smashed, actually. You know, a lot of questions. I don't think what Michael Saylor is doing is a Ponzi. It's a lot of people say it's Ponzi this, Ponzi that. No. Look, if you're bullish on Bitcoin, which I am, I DCA Bitcoin every Monday, which I did again today. So, you know, just go to IBIT, which is the BlackRock ETF. Goes dollar for dollar with Bitcoin. You know, MicroStrategy or MSTR, it's surrogate of MSTU, which is a 2x ETF. Look, these things are to be traded. You know, obviously, strategy is the main proxy, but then they traded like, well, it got up to about 2.5 actually. MNAV is multiplier to net asset value. Most of the stuff, well, strategy holds about 685,000 Bitcoin, worth about 72 billion. Well, then if you look at the dilution and everything else they put out, why is the market cap of the company 110 billion, right? So that's MNAV, that's multiplier to net asset value, because whatever else MicroStrategy has or strategy has is not worth 40 billion. Why is it selling at a premium? And a lot of these, like the new one, Bitmine, which is the new one from Tom Lee, who was buying Ethereum, right? This one is about 1.3 MNAV. So if I want to buy Ethereum, I'll just go buy Ethereum. Why do I have to pay premium? So what's happening is that a lot of hedge funds are buying Ethereum and shorting BMNR, or they're buying Bitcoin and shorting MSTR, which they think that premium should be a par with the month-to-one. Well, if that happens, nothing bad is going to happen. There's a lot of doom and gloomers out there saying Michael Saylor is going to be forced to sell BTC. Couldn't be further from the truth. You guys have to study that. It's not going to happen. Even if BTC drops to 10,000, Michael Saylor doesn't have to sell BTC because he's not leveraged and he's not borrowing money to buy it. A lot of people are like, he's going to be forced to liquidate. I'm like, absolutely not. It doesn't make sense. Look at the numbers. Yes, granted, they put out a couple of tranches of convertible preferreds out there and convertibles. Okay, that's to the tune of maybe 6 billion, maybe 8 billion, with a coupon of 0%. With a coupon of 0%. Okay, so let's say 5 years, 6 years. Those are notes. The convertibles come due. Do they have to sell Bitcoin to pay those note holders back? No, they can dilute. Obviously, it's not good for the stock. They can issue common shares. They can do whatever. But Michael Saylor is taking advantage of the premium. And I mean, look, if you're interested in BTC, just go buy Bitcoin and put it in a cold wallet. Buy it on Coinbase and take it out and put it in your cold wallet. All these other trading tools, proxies, as long as there are premiums, I look at them as like, well, why do I need to be involved with this stuff anyway? So, a couple other nosebleeds open. I do follow some of these, nosebleed stocks. Obviously, NEO had a massive run. I don't know what it's doing now. 614. It's red, putting a red candle. Okay, we bought some puts. I do these counter trend rallies once in a while, and when everybody's in the boat cannot go anywhere but backwards. But anyway, so yeah. That's the way I trade, folks. I have a few minutes. I'll go to the front, answer some questions. Hope you guys enjoyed it. Hope you come back on Wednesday. I'll have a couple of extra topics to talk about on Wednesday. The usual thing is I go about an hour, short and sweet. I answer the questions, show my positions, post them in the community page. I don't know. I don't think I can do more than that. All right. So no questions, huh? Okay. I don't know. Why not? All right, you all are shy. Nobody wants to grab the link and come on. There's the link right there. You guys can grab it and come on. It's open mic time. No. Okay. Well, so I'm going to go on for about another 4 minutes, 5 minutes. So let's go through the. I think today is the first time I'm broadcasting on X as well. So thank you for the support. Thank you for watching. Please share. Number one. Number two. I have a much larger YouTube channel on some other topic. There's no money in YouTube. I'm not doing this for YouTube money. It's pennies. YouTube algorithms are as brutal as anybody else's, but I'm trying to pay it forward. I really am. At this stage of my life, all I see is like a good friend who tweeted yesterday or a couple of days ago that I'm one of the traders that he follows. John. Amazing human. In fact, his interviews on my channel, interview with Anthony Crudelli's on the channel. I just like paying it forward. I want to share my experience with you because one thing I believe is you cannot teach or buy experience. Okay, you have to do it. And us old timers, I call it OGs, right? We have the experience. Now, experience is an edge without a question because we've seen it all. And we can put the tea leaves together maybe. Maybe we're not as hot as a hotshot 25-year-old full of adrenaline trader, but my results speak for myself. I don't know what anybody else does. The front page of the YouTube channel, my YouTube channel is about a year old. Front page, the first video is what I did last year. I think I started the channel in May of last year. My full year results, full transparency, my own account with charts, graphs, whatever. And then this year I'm going to do one at the end of the year, I'm pretty sure, and with the results. At the moment, as I said, I'm working on about a 7-8% drawdown, and I'm a touch under 60% plus for the year. Again, it's a 6-figure account. It's meaningful money. But I have an investment account. I buy and hold stocks there. Trading account, completely different story. I think if you're a trader, if you're an active trader, swing trader, day trader, position trader, whatever you want to call it, scalper, there's cost in trading, right? There's commissions, there's slippage, there's taxes. Short-term capital gains taxes are treated a lot differently than long-term capital gains taxes. So if you're a short-term trader, your tax rate is going to be your ordinary income tax rate, okay? So discounting all that from your return on capital, if after that, if you're not at 3-4x of the benchmark, I will not trade, right? So at the moment, let's say S&P 500 is up 10%, 11% for the year. If I'm at touch under 60%, I'm doing fine, right? I'm trying to get to higher numbers, of course, but I'm not going to go push it just to go to 100%. The point, again, I'm trying to make is, analyze your numbers. Look at your numbers. If you're not outperforming the indexes by 4 or 5x as short-term traders, swing traders, or day traders, or scalpers, I don't know. Other than adrenaline, I don't know what you guys are getting out of trading. You need to trade less to make more. You need to manage correctly, and you need to, risk manage. You need to position size correctly, and it will all work out. And learn, more importantly, learn how to take losses. Not every trade, right? And I have a video, actually, you guys should go check it out. Is win rate the most important thing for a trader? Numbers say it, they're not. Go check them out. They're not. I have a good video on that, actually. Actually, my win rate this year is miserable. It's like 54%. By my account, it's up close to 60%. Thoughts on WeRide? Love it. We've been trading WeRide between 7.5 and 10. I don't know, actually. Let me go look at the chart. I don't have a position on it now, but it's one of our, staple holds, actually. Good option trading, sell some puts, right? Put some synthetics on. Let's go take a look at WeRide's chart. I think it's about 980 range. You guys can see this, I'm sure. No, you guys can't here. Nope, this one right here. Okay. All right. WeRide and Pony AI are the two Chinese AVs. Like, let's say WeRide and Pony AI are like the Waymos of China. Beautiful chart. I mean, look, it's just basing. Look at all these labels. I just got tired of labels. I traded WeRide so many times, just and very profitably too, by the way. I don't have a position on it yet. Pony actually looks better. Well, technically anyway. But WeRide is just basing, bottoming. They have deals with Uber. Anytime, into the low 8s, it's a buy. Either sell some cash secure put or do some synthetics, if you know what synthetics are. This is Pony. Pony is also going higher, but at a much higher level. There is talk about Pony being acquired by the ex-CEO of Uber, Travis Kalanick, the U.S. part of it anyway. I mean, look, they're expanding around the globe. Autonomous vehicles are the future. I believe in it. And is that why Tesla is getting a bump here? Well, probably, I mean, they have the robot taxis, albeit with a human in it at the moment, with a safety driver, but autonomous vehicles are the future. That's why I bought Google in my long-term investment account. I mean, I got lucky because I paid like 143 for it, 145 range. And I'm just going to hold because I think, Waymo's ahead of everybody at the moment, but then that's the future of driving. That's the future of transportation. Look, it's a capital intensive thing. They're not going to make money for a long, long time. Although WeRide, NVIDIA owns a chunk of WeRide, Uber owns a chunk of WeRide. So they're in the right place, and they're expanding into the Middle East, right? They're expanding into Europe with Uber. They have good partners. I like it. I mean, the price takes precedence for me, right? Just basing, one day it'll break out, and then we'll see this double, triple, like everything else. So I do like it. I mean, maybe not at the high 10s or whatever, but I do like it. I mean, it's an accumulation phase, basically. Okay, they have a good cash position. Now, of course, they're going to burn cash for a while, but if you do believe autonomous vehicles are the future, definitely one of the interesting stocks to look at. Yep, I've answered that question. Good question, actually. Sergio, could Intel be a play? No. No, I mean, look, I have mixed feelings. Actually, I'll probably talk about that on Wednesday. I have mixed feelings about U.S. government getting involved in owning individual companies, or parts of it anyway. I really do have questions about that, because this is the first time we're experiencing something like that. It's the first time we're experiencing U.S. government being directly involved in a company. I don't recall another time. I mean, most of you may say the Fed is, manipulating the markets and this and that. I get it. I get that part. But direct involvement like this, owning 10% of Intel, I don't even know how that deal came about. What did Intel get? I mean, I have to look into it. I really don't know the details. Did the U.S. government lend them money to own 10%? Is that what they got in exchange? Equity? I'm not sure. I mean, stock did move from 20 to 25. I'm not sure. I have to look into it carefully, but I have mixed feel. I don't know. I don't know how I feel about U.S. government owning chunks of public companies. I'm not sure. I have to think about that. It's a good question, though. Thank you. Yeah. Okay. No questions. Nobody wants to come on. All right. Well, Wednesday we'll do this again. Trading with Sergio Wednesday edition, 10 a.m. Pacific, 1 p.m. Eastern. Friday I'll have Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. It's the same structure, same thing. I'll put the link out. You guys want to come on, discuss it. For Robinhood, you mentioned the leverage ETF ROBN. Absolutely. It goes down twice as fast and goes up twice as fast. If you're wrong, you lose twice as fast. If you're right, you'll gain twice as fast. I mean, right? Just turbocharge, basically. Because a lot of people say, like, why do you short stocks? Why don't you go buy options? Well, if you don't understand Greeks, if you don't understand IV, and if you don't understand IVR, basically, if you don't understand gamma and delta and all these things, buying puts, stock making, because if the market makers have raised the IV to a ridiculous level, for example, on open, right? Stock is $5, $5.50. This week's expiration, Friday expiration, $10 calls were like 15 cents at 400 IV. Historical IV on that is like probably 80. So even if the stock goes your way, you're not going to end up making money. Like if you buy puts on something, unless the move is substantial, you're not going to make money because time decay is going to kill you, right? Because the market maker increases the IV. If the IV is like expected move. So if the market maker raises the IV from 100 to 200 and you buy puts, stock may go your direction, but you're still not going to make any money. Yeah, that's the problem with that. Yeah, that's yeah, definitely. I'd rather do that. I'd rather do PLTU and PLTR. They're going to go down twice as fast, right? Because 2x ETF, stock goes up $1, they go up, right? Well, stock percentage-wise, stock goes up 1%, they go up 2%. Although there's definitely slippage because the 2x ETFs do not hold the underlying equity. They have things called swaps and they have long-term options in there. They don't hold the equity. So that's why they always lag, actually. The percentages are not there. I mean, substantial amounts too. For example, MSTR, MSTU, right? MSTR will go up like 40%. MSTU will go up like, instead of going 80%, it'll go like 72%. Same thing on the way down. So you guys need to be really careful with these 2x ETF. 2x ETFs are not made to be bought and held, or 3x ETF or any increased multiplier ETF. So they're for short-term trading. So if you're dealing with a breakout and has a 2x ETF, I'd rather get into the 2x ETF like we did actually with Apple maybe like 3 weeks ago, which is AAPU, is the Apple's 2x ETF. So yeah, I mean, your risk is higher, obviously, if you're wrong. But if you're wrong on a short, you're wrong. Either way. And if you buy puts on Robinhood, you're going to pay all that premium. I mean, you can synthetic short Robinhood. You can sell call and buy put, right? You can do all kinds of things. I mean, there's many ways to skin the cat. But I like shorting stocks because I have the account size enough to short stocks. And then, as we know, we'll finish with that. Stocks walk up the stairs or they go up the escalator. And then what they do, they take the express elevator down. So actually, shorting, you'll probably make more money, but then you have to be really careful because shorting has immense amount of risk. There's unlimited upside if you short something. And what's the downside? Zero. I haven't seen a stock that's below zero yet. So be careful shorting things, folks. But You can short things and sell puts against it. There's many ways of shorting things as well, right? Which I've done on this channel, and then yep, you got it. All right, folks, I'm gonna go have a cup of coffee and then finish the day. Thanks for joining. I will see you guys on Wednesday, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern, and again on Friday for Power Hour. Please put a thumbs up if you enjoyed the telecast, and it helps the algo. Share. I definitely know what I'm talking about. So I appreciate the support. I'm here to answer questions, pay forward, share my experiences, share my trading, and other than that, and vent out, because I'm not buying this deficit game we're playing. But other than that, you all have a great day, the rest of your day, and see you guys on Wednesday.